Hey, it's Jeff Scott. This is Valentine's Day. Hope you all had a wonderful time this weekend. And this is my top-down review for February 14th, 2016. Usually I do these earlier in the day, but since the market is closed tomorrow, I thought I could do it before I went to sleep. Of course, the futures are up considerably. It looks like the NASDAQ futures are up right now a little bit over 40. The Dow futures close to 200 and the S&P close to 17, 18. Of course, we have no market to trade tomorrow, and which means by the time we do open, God only knows where the market will be. But after Friday, it's not a big surprise to see the world opening up strong. And I remember looking at it earlier, just to go back and look at some of my international markets before I get started. The Japanese are up over 5%. Hang Seng's up 2.5%. The Shanghai's down 1.5%. Most of the Asian markets are up, again, probably related to perhaps some of the movement in oil, although oil is down right now about 25 cents, perhaps all in sympathy of the U.S. markets from Friday. So let's go ahead and let's start. Disclaimer, this is for education purposes only. I'm a doctor, not a broker. I am not affiliated with any software vendor or trading company. What that means is I don't get paid if you buy any specific program, and I don't get paid to say good things or bad things about anybody's products. Everything I show you, I have paid for, and have paid for a considerable amount of education, frankly. Trading involves risk, and you alone are solely responsible. I don't spend much time on this anymore because I think most people have heard it before, but I try to marry the world of CanSlim, as brought initially by O'Neill, improved by Morales and Catcher, and made electronic by Woodward and Brown. I balance that with some of the great trading tricks, tools, programs, education, and frankly, friendship from John Person. He's written a couple of great books. He's a mentor of mine, great trader, teacher, and he's got some great technical tools which I use. Add a little Van Tharp for position size and money management, and I also like to add a little bit my buddy George Lee. Just an aside, I was asked by some people this weekend when my next live meeting will be. Remains to be seen. To be honest, I've seen a lot of people cancel their meetings of late because of difficulty driving attendance, and I'm sure that's related to the market. Plus, there's so many people out doing education. I am planning on going the first weekend in March to Orange County, and hopefully I'll have a couple hours of speaking time there. Plus, you'll get to hear a lot of my buddy George Lee, and probably Chris White will be there, among others. I have a lot of programs. I have my desktop. Tonight we're going to look at TradeStation, probably Thinkorswim, maybe Genesis, probably not. And then for my analysis, I always use HGSI and EdgeRater. There's a number of seasonality programs. The best thing about competition is it forces everybody to improve. I'm going to probably use Seasonality Trader tonight. Best Choice was recently purchased by a new party who has, I've heard, committed to doing some major upgrades. And I use a few websites as listed there below. I always like to start my review by looking at what happened last week. So this is the market on Friday, and you can notice that there's not a lot of red. This was a very broad-based, explosive market. The only things that were laggards were the things that have been leading, utilities. And you could see gold, which has been strong, actually was off a little bit. Yet the gold miners, and perhaps it's the miners part beyond gold, actually outperformed. Of course, we got 1 week to go before earnings expiration, and this should be an interesting week as a lot of options I'm sure people have are somewhat out of the money because of the market sell-off. Now, what's interesting is there were a lot of strength and some major winners. You can take a look at Win was up 15% on earnings, and I guess things weren't as bad as they said. Energy, a big move last week at the end, and broad-based movement last week, whether you were an energy play on Friday, oil gas producer, or services. Financials had been weak with all the discussions about negative interest rates, and even they and insurers had a good end of the week. Now, if you look at, this is Thinkorswim, and we have the E-minis, the NQs, the YMs, lower left is the TFs, then the VIX, and the dollar. I love looking at this picture, and what I see is that we probably had reversals on Thursday. You can see we traded down and closed in the midline on most of the indices on Thursday. This is the 1,000-day moving average. It just gives you an idea of how far this market has come down. And you could see the S&P almost got down to tagging it. The NASDAQ 100, similar candle, but nowhere close to the 1,000. And the Dow actually traded down to, closed right below it on Thursday, and had a nice move off the 1,000-day moving average on Friday. The Russell futures way below the 1,000-day moving average, but also had a hammer on Thursday and a nice up day on Friday. And interestingly, the VIX, despite a super strong day, the VIX is still, on the VIX futures, is still very elevated compared to where it's been. We'll come back to that. And then this is the dollar, and the dollar's had a soft week, which is partly why gold was up, and also partly because some of the, I think, fear in the marketplace and looking for a safe haven. So this is on the daily. Same things on the weekly. You could see how the S&P has almost come down and tagged its 200, which it hasn't done in quite some time. This is all of 14 and all of 15, and you could see really never spent much time below the 50, let alone tagging the 200. You can see the 200 week. These are weekly, so this is again the 1,000 daily, 200 weekly here, 200 weekly here, tagged by the Dow, and below it on the Russell. This is my Genesis screen. Again, the same pictures with the E-mini, the first stack, then the NQs, the Russell futures, NYSE, and the Dow futures. And it gives me a great look. I can vary the time frame on the top bar. This is all 60 minutes here. This is daily, and then this is weekly. So real quickly, you can see everybody is still in a weekly sell signal. So we're still in a intermediate term or longer term downtrend. And we did see some strength with a daily buy signal. These are John Person's buy signals on the Russell and the NYSE. And frankly, just looking at the chart patterns, we're very close on the others. And I can tell you, I'm looking at my futures right now, and with the move we've had this morning, or this evening, I should say, the E-minis now has a buy signal on the daily, as does the NQs, the TFs, and the YM. So everything is now flipped to positive, although keep in mind it is still early in the day, and we don't trade again for 36, or not quite 36 hours, for probably 30 hours. 32, 34 hours, I can't count. So Janet spoke this week, and it's interesting where she's not willing to give up the story about interest rates yet. This white line here is the 10-year Treasury Yield Index, which I kind of use as a surrogate, and it's telling me that the 10-year Treasury has a 1.745 interest rate. Now, the bad news is when I've seen it drop below 2, it's not been because of the easing, it's been because of concern of a slow marketplace, slow economy. Who thinks Fed is going to ease 4 times this year? And if they are going to ease, that'll go off in a second, I apologize. That's my friend George calling, but I'm going to finish this first. If they are going to ease this year, or excuse me, tighten 4 times this year, don't you think rates might be heading north and not south? So that'll be interesting to see. Now, it's no surprise to me, and I have so many computers with Skype, it's so hard. All right, there you go. It's no surprise to me that when I looked at stock charts this week, there was a lot of strength in REITs and some big dividend payers, as I think people are looking for yield that they're not getting from the treasuries. Now, I broke this week's AD line out between the small stocks in the 2000, Russell 2000, and the large stocks in the 1000. So you have to give me a little bit of leeway here because I know it's hard to see. This white line shows that the Russell 2000 AD is really leading advanced decline line to the downside. Yet here it is up here above the 50-day moving average if one looks at the Russell 1000. So it really shows that large stocks are starting to join the party of the sell-off, but this market is really sold off hard in the smaller stocks. What about market participation? The white line represents the percentage of stocks trading above their 200-day moving average. And if you could look at it in the real time, you would see it's about 15.5%, meaning that 85% of the stocks in the marketplace are trading below their 200-day. There's a bear market, maybe not on the indexes across the board, but there's certainly a bear market in a lot of stocks. And if you look at those stocks above the 40-day, it's actually quite a bit higher up here where my arrowhead is. And it's interesting is the markets continue to get lower here, yet the number of stocks trading above their 40-day SMA has actually increased. So that might be an important divergence, suggesting that we're near a tradable bottom. And how about the McClellan? I mentioned last week that the McClellan was not at all oversold. And so another divergence is the market has got a lower low here, yet the McClellan is much higher than it's been. So is this telling me perhaps that it's all market rotation and we're still in the midst of a dramatically hard sell-off? Or is there a signal to me that maybe this divergence here and on the stocks above the 40-day suggests, again, a more tradable bottom is in and that we may go up from here? Who knows? Time will tell. So the buckets, they moved off oversold. And you could see that last week it was about a 50-50 play, but close to 12% of the stocks in the S&P 1500 were trading below the lower Bollinger Band. And you could see that those stocks moved towards the center. Still, most of the stocks are trading below the midline of their Bollinger Bands in the S&P 1500. But again, 212 looks a little bit better than 205. The Hindenburg omen, this is something that may not work anymore. It may have to do with the NYSE being filled with interest-sensitive bond funds, ETFs, and others. But historically, the Hindenburg omen is fired prior to major market sell-offs, and there is no Hindenburg omen. Now, interestingly, there's not a whole lot of stocks setting new highs, which is one of the requirements, less than a 1%, while there were 4% of the stocks setting new lows. That was on Friday compared to 21% of the stocks on Thursday. Friday, obviously, a very strong day in many markets. Here's the Edge Rater shot of the market. Now, a couple of different things here. We've been in a funk, and you could see the red here went to green, and then we had about a week of red. This is the Woody indicator, percent B times bandwidth, and when it's red, you don't want to be buying. When it's green, you probably don't want to be going short. And when it's yellow, it's sort of a neutral signal. Well, we had a number of Kahunas fire in the major indexes, which shifted us out of a sell signal back into neutral. I had some questions about what was going on here in the bandwidth column. And, bandwidth gets wider in periods of a volatile market. And I think what you're seeing here is the expansion of the bandwidth, and hence the yellow and the maroon color because of increased volatility. Now, there are a number of big stocks that over the last several years have led the market higher. Now, they rolled over back about the beginning of this year. Here's a list of those stocks. And last week, we talked about how they were in big trouble, how they'd fallen off the cliff. And then we saw 1, 2, 3, 4, 5. We saw on Friday last week a bingo, which is a signal of which is this gray bar, the baby out with the bathwater. And they bounced at the end of the week. Not a very impressive bounce, frankly. 5 days, they were down 0.1%. They're down since the beginning of the year 22%. And as I said, they're on life support. Now, if this market is truly going to go higher here, then I would expect some of these leaders to become alive. Amazon's been clobbered. Facebook's come down a little bit. Google's come down. Netflix come down. Apple's struggling. LinkedIn got killed on earnings. Tesla got killed. The one guy left who have earnings come out is Amazon, is Priceline, and they'll be out this week. And then I like to look at Lowry's buying and selling pressure. And I just wanted to point out this was the year 2015. This is a service I pay a lot of money for, and this is perhaps one of the most important indicators I look at. And you notice that I was told, because of the cross of the red above the black or selling above the buying, to start getting out of margin, reduce my risk taking, really in the summer of 2015. And unfortunately, despite a couple of false alarms as these two came together, we are still wide apart with the selling pressure way above the buying pressure. And that to me is a signal to continue to be careful in this market. So my thoughts, I could be bullish or I could be bearish. Let's go bullish. Big move at the end of last week. Divergences all over. McClellan and indices diverge. The VIX, although it's high, it's not as high as it was. We'll look at some of the VIX in a few minutes as it was with prior market corrections. Despite all the concerns about the world, the U.S. still growing with consistent good employment numbers. And the one thing that I think really is important is that bear markets are usually preceded by recessions. And since the early, well, forever, the last 100, 140 years, there's never been a recession that was not preceded by rising energy costs. And if anything, our energy costs in this country are not rising, they're falling. What's the bear case? I'm going to show you a picture which I got from a friend, Paul Duncan, who did a presentation this weekend, that this might look a lot more like 2008 than we thought, which means we still could have a considerable additional fall to come. Hearing about negative interest rates may make you feel happy if you have an ARM. I wonder if you have an ARM and rates get that low, if they'd have to pay you because you have well, I'm sure they don't, but I can't imagine that negative interest rates are good long-term for stock prices and any asset class. Flight to safety in the U.S. May move it more towards income producing from growth. Worldwide slowing could be contagious. China, then Europe, is the U.S. next. And even if all those things are all okay, if this is a bull that we're still in, it is getting kind of old. And oh, by the way, I saw an interesting chart from dshort.com that basically we're the only major market not in a bear market officially, and we've been close. So this came from Paul Duncan's presentation at the GGT meeting this weekend. Are we A or are we B? On both, you have sort of a topping formation, big move up, double tops, the market rolled over. Dan Fitzpatrick calls it like water coming out of a hose. Which are we? Well, I'll tell you that we are B. A was 2008. So if you think that these are very similar, and I'm talking about how we might have a tradable bounce here. Might is a big word. It's not 4 letters, it's 5, but it's a big, dirty word. Don't know. We have to see what the market does. Here's what happened in 2008. Similar pattern. We did rally, and then I think this may be the big teaching point. We rallied up to major moving averages, and we rolled back over again. I believe this is the 200-day. So the message here to me is pretty simple. We may not be done yet. You should not count on being done yet. You need to still be somewhat defensive. Maybe time to stick your toes in the water a little bit more. But as we pull into these major moving averages, they may become great shorting opportunities. Remember, patterns are cyclical, whether you look at stocks, industry groups, indexes, and even if you look at small time frames and big time frames, you're going to see this pattern over and over again. So now, have we moved down this curve and we're getting down here? We might be. But I'm not going to believe that we've done this until I start to see a signal. And just because I'm getting close to the end of a fall, and I'm not even saying we're close, I think it's really debatable right now. I mean, are we going to bounce and go back and threaten old highs? Or are we going to potentially bounce up to resistance and go back down? I think that to me is still the likely scenario. So unless you're really convinced that you're on the way up and you've got a lot of signals that are supporting that, you still got to be defensive. What does that mean to me? Is, again, you might get a little bit more aggressive, but I'm still probably thinking more like I do in the center, raising cash, smaller positions, selling premium, and I'm not sticking my head out to be chopped off, because the last thing I want to do is wake up in 2 months and be in this green circle, everything firing, and realize that my trading account has shrunk and I've got to go move money out of some long-term savings. Don't want to do that. Done that before. and I don't think you want to do it either. News this week, there's a fair share. We got some CPI numbers. Boy, they're pretty ugly for January, aren't they? We got some continuing claims. We got some energy. We got some FOMC minutes from January. That should be interesting to hear what the discussion was about further tightening. And over here, we have a ton of earnings this week. And I've highlighted the big kahuna of the earnings for the week, which I think might be Priceline. Tonight's agenda, as always, after my introductory comments, I jump into my market review and my top-down analysis, maybe some time for some bottoms-up, and then do the chart of the week. And if I remember, I want to show you Priceline seasonality. The chart of the week, which I do for educational purposes only. Sometimes I'll talk about the use of options. You must realize that options carry substantial risk of loss. I warrant no expectation of return, and I may or may not already have a position in a stock I present. I plan on taking the trades that they execute so I can discuss on the following session, and I'm doing this not to provide stock tips, but to openly discuss the process I take in identifying an item to trade and how I make the trade, including targets and stop losses. Last week we put SLV. Here we were sitting last Friday. I was concerned that the 200-day might be resistance. In fact, I was very careful, and I set my buy stop above that, which I knew would limit my returns. Why did I like it? Everything was green. I was concerned that we're getting near the top of the high jump, but since we're under the 200-day, I'm going to ignore that. It had a mobile breakout from a squeeze, a number of pocket pivots, and a kahuna, and the OBV had headed above its moving average. Now, this red sign here is the Phoenix, which is a follow-through to the downside of the general market. Now, that may actually be a bullish thing for SLV since of the flight to safety. On my TradeStation charts, I also pointed out this orange thing here, which is a high-close doji that occurred on both the daily and the weekly with PPS buy signals. These are some of John Person's great signals. I also showed how the on-balance volume was just taking off and leading price. So to me, this was a reasonable risk buy. Here was my buy point, which was above the 200-day moving average, and my stop and my target. The way I trade these is if I get filled, I go in, and then I take half off when I hit my target, and at my target, I'll raise my stop to break even. You could see here we've moved up about halfway to my target and stalled. If this market is strong, we're probably going to come back down soon. I will probably not leave my stop in play. I'll probably bring my stop up to break even very quickly because if this market is going to bounce, I'm not going to want to stay here. That said, as I said, there's still 34 hours, whatever it is, until the market opens up, and I'm not counting on anything. So many things have changed overnight here. So far, we have made some money on it. We will come back to my chart of the week for this week, and we'll go from that later. All right. So next thing I do is I jump into TradeStation, and I kind of want to look at John's stuff and a little bit of Elder stuff on the major indexes. So what I'm looking for are really 3 or 4 things. The arrows are simple. That's a PPS buy. That's a PPS sell. That gives me a sense of the direction of the market. The color of the price bar can be red, green, or blue. That's an Elder impulse indicator. If it's green, I have permission to buy or hold. If it's red, I have permission to sell or hold. I can't be buying on a red. I can't be selling on a green. And if it's blue, it doesn't give me a signal. When you start to see a clump of these dots here, that tells me that there's a good chance that there's some MACD divergence going on and that this might be something that is signifying that a bottom is coming. Notice the time frame. These are days that it took for this to actually matter before the stock moved up. So when I see this divergence indicator and when I see any divergences, I know that it suggests to me that we might see a reversal. However, when I see a divergence, it doesn't tell me it's going to happen tomorrow. I have the high jump down here, but since we're really pulled back on all these indexes, I'm not going to even look at the high jump. I have daily, weekly, and monthly, and let's go through the major indexes. The NASDAQ. Interesting. The NASDAQ had MACD divergence showing up on the histogram, and you could see it. Lower low here versus here, yet the MACD barely broke the back of the midline. That is a very bullish signal for me, especially since it's pulled below the auto envelope, which tells me it's extended to the downside. No surprise we had a pop on Friday. A person buy signal came in, still only blue on Elder. But this is until proven otherwise, is a counter trend rally as we have down sell signals on the weekly and the monthly. About the Dow Jones Industrials, did not trigger a person buy signal. It did become blue here, but it's still in a downtrend. How about the S&P? Again, divergence coming in. It did go to blue here, but on the PP person signals, it's in a downtrend. And then lastly, the IWM turned blue, but still in a person sell signal across. Now, I mentioned that with the move here, we might be seeing a difference. If we look at the E-minis and take a look at you can see we had a buy signal that came in this morning or this evening. Again, we still got 36 hours, 34 hours before we can trade, so God only knows what's going to happen. On the NQs, also not yet, interestingly. On the NQs on Genesis, it's firing. I suspect it's close here. On the TFs, it fired on Genesis. It hasn't fired here. And when I say it, I'm specifically referring to John's signals. Let me put this in a little bit. And on the YM, the Dow, it also fired. So the big stocks are firing already. It'll be interesting to see if the others catch up. So just by looking at the markets, I would say that still overall intermediate, long-term into a downtrend, but it looks like we have some type of a counter trend rally in place. Very quickly, let's look at the sectors. XLB is materials. Interestingly, it's got a weekly buy signal and a green over here. It hasn't yet had a PPS daily buy. But at least some interesting things happening here. You see the buy signal coming in after the divergence on the weekly. Energy, daily, weekly buy, monthly sell. Finances had a rough week, and you could see still in a sell signal throughout. Industrials had a green bar come up here, but still in a person sell throughout. Technology, a blue bar, but still in a sell in all three time frames. Staples had a nice move on Friday, as in a daily, weekly, and a monthly buy. So if you must be going long, we might want to look at stocks in the XLP in the consumer staples. The XLU utilities in a sell signal on the short term, but still in a longer term weekly and monthly buy. These have had a big run up, and you can see right here they just had a pullback this week, especially as the rest of the market started to improve, if I can use that word. Healthcare remains in a bear, beaten up, and discretionary popping up with a buy. So some strength coming into the consumer, and the strongest to me so far today, thus far, looks like consumer staples. Now let's jump into HGSI. And of course, I forgot to do this already, so I'm going to stop for a second. Okay, I'm back, and I am looking at Major Markets Plus, the Woodward and Brown user groups. I'm going to use the T1, which looks at only price and volume, and looks at the, hold on a sec, let me just tell George. All right, sorry about that. It was just George Lee talking about the March meeting with Greg Mills in Orange County. It's really, if you're in the West Coast or you're interested in the meeting, it's really a great value. It's usually $400 or $500 for 2.5 days of education. Mostly George, a little bit of me and Chris White, and then perhaps a great trader, Dave McClellan, might be able to make it this time. Email me if you want more information. I can just send, and I'll forward your email to Greg. So here's Major Markets Plus, top-down analysis, mostly looks at Friday performance, the last week's performance, and just a little bit for the last 3 weeks. So you'll notice that gold is up at the top, transport's leading the market higher. Maybe that's good for Dow theorists. And what was weak for the week was treasuries, volatility, and the dollar. You'll notice that the markets were all over the place, and that's because they did have some challenging days. If you look at on Friday, gas and oil were up big, as were most of the indexes, but over 5 days, pretty much all the indexes were negative on the week, with the utilities down 2.2%, NASDAQ down 2%, the NYSE down 1.7%. Let's take a look at some of our most important. We'll start with the S&P 500. All right, so I already know that most of these have Kahunas. I want to make this easier to read, so let's just go to the simple. Actually, I want to go back a second. Change this to, let's see if this will work. Remember earlier I talked about 2007, 2008, and the Hindenburg omen. And this is what I wanted to show you. I wanted to show you that in 2008 and 2007, we had several series. These red bars are the Hindenburg omen firing. And now let me scrunch this up a little bit. And you can see they fired at the top. This is where we would be if this was 2008. I talked about a pullback into the 200-day moving average and then a failure from there into the 2009 lows. As far as I'm concerned, that remains a risk if we bounce here. And I'm going to, being defensive means that until proven otherwise, I'm not going to go aggressively long. I'm going to be careful as in the next couple of days. And if we fail at major moving averages, then that will be, I think, an opportune time to short. So look at where we are now. Big move up on Friday. This is the 200, the 50, the 17 simple, and the 8-day exponential. And I've been saying several times that I thought we'd move up into the major moving averages and then worry about failing and being a great place to short. Nothing has changed. Big day on Friday on the S&P. Felt better if you were long than the other days did. Take a look at the Dow. Looks just like the S&P. Got underneath all the moving averages. I look at the Russell 2000 small stocks. Again, similar pattern. Big sell-off underneath the major moving averages. And lastly, I'll look at the NASDAQ composite somewhere here. And ditto. Is this a bottom? Could be. We still got a lot of overhead supply and resistance to go through. I think the short term, the easier move is probably to the upside, but we're going to have to get above some of these moving averages for me to be a believer. The dollar, I mentioned, sort of was languished this week. 1, 2, 3, 4, 5. So it was down a little bit on the week. The VIX, I mentioned that it's not as high as it's been on previous other market sell-offs. Here's the August one. It got up into the 50s. And the VIX peaked out here about 30 and is coming back down. That's the good news. The bad news is it's still elevated from the 15, 13 that it's been over the rest of 2015. If I look at gold and silver, since we had a weak dollar and there was a flight to safety, one might expect some gold miners to look good. This is GDX. Big move up, as well as gold. Now, I know there's been some controversy in various places. Last week I talked about the strength in gold and silver. I mentioned that I was concerned about failure and that we failed multiple times in this downtrend and that perhaps this time was different. I talked about American Barracks. I talked about Gold Core going long. And in fact, in my stock of the week, I chose SLW, a silver stock. I don't know if it's clear sailing and we go back up to 2,000 on gold. I kind of doubt it. I think this was too much too fast. And if I saw a stock go into a climax run like this, I'm thinking it's coming back down. So I'm going to be, as I mentioned with my SLW, I'm going to be very careful on that position as well. And if one looks at silver, we'll see a lot like the SLW, which again, a big move up, got above the 200. This has been resistance on the way up, the way down rather, and I'd still like to see it come back and retest and move up again before I buy into this. Next, I like to start jumping into some of the industry groups and see which groups are leading the markets higher. And so interestingly, banks, miners, communication, energy, biotech, energy, pharma, airlines, and footwear. My goodness, it feels like I've gone back 6 months. Let's take a look at some of these. So what I like to do is what I've done is I'm ranking these groups in HGSI by force, which is 2-day price and volume, price today minus yesterday, times volume, and take a 2-day exponential. So what really drives these mostly is volume. So the big volume stocks, their groups usually come to the top. Right-clicking on this, I'm ranking the stocks. Let's take a look at a couple of them. JP Morgan, island reversal here on Thursday, bad gap up on Friday. Is this a buy? Let's go into my favorite indicator sheet here. And we'll see we had a Kahuna on Friday, mostly green up of here, coming out of a squeeze. Still hasn't broken above the PSAR, and it got trashed on Thursday with the baby out with the bathwater. You know, I might consider nibbling. I know Jamie Dimon brought a lot of stock last week, 500,000 shares, I believe. It pays a 3% dividend. You know JP Morgan's not going anywhere. I put that on my buy list. I like to see what it does before I say what I'm doing with it, but I'm going to watch it. Bank of America, hammered. Not quite the move on Friday as JP Morgan. 1.7% dividend. Citigroup, same as Bank of America, as Wells. These guys got hammered. JP looks like the strongest coming out of it. This is not growth stock investing. These are looking at major companies that had kahunas and big moves over the week on Friday after being trashed. Precious metals, talk about big moves after being trashed. Newmont, look at this move that it's had. Broke above the 200. Really only tested it for a day and blasted away. You know, again, I don't know that the bear market in materials is over or not. It may be. But over the last, go to weekly, couple of years, gold has been just decimated. And so Newmont, junk off the bottom, a number of weekly kahunas. This could be the real deal. It's not on earnings per share growth, but it does make money, pays a small dividend. Gold Core is one that I've been playing, ran up, tested the 200, moved up from there. It too has had a big move off the bottom of about 60% in about 10 days. Franco-Nevada Gold, American Barracks, all the same pattern. It's a pretty nice looking chart as well. Gold and silver stocks look great. If the market has bottomed short term and starts to move up, they'll probably reverse. Regional banks. Again, another group that's been hammered. Well, so is the whole market. Looks a lot like JP Morgan and Bank of America. Island reversal, gap up on Friday with the Kahuna. This is U.S. Bank Corp. Here's Regions, a similar pattern. FNB. I don't know which one to pick. I could just go with KRE and get an ETF that looks just like those stocks. I might want to use this instead. I'm not showing you growth stocks that are in major up moves. Communication equipment. Well, here's two stocks. Cisco, great earnings. And Cisco had a gap up, traded up to the 50. You'd expect some resistance there. It had pocket pivots, mobile breakout from a squeeze. Pays a 3.3% dividend. Let's look at this on a weekly. And coming off the 200 weekly. Cisco outperformed on its numbers, and that's got it to pop. And then Rovi really looks one of the prettiest charts out there. Let's just look at the news, because I didn't check this earlier. Beat estimates. So here's a stock that was in a downtrend for quite some time. Just gapped above the 200 weekly moving average. Let's go back to the daily. So here's a mobile breakout from a squeeze with the Kahuna. Everything is green. Makes money, although not much earnings per share growth. Beautiful chart. It does, I like earnings per share growth or a dividend. Obviously, from a technical perspective, this will be one of the stronger charts that I'm going to show you tonight. Exploration and production, another group that's been beaten down, showing some life. Here is Pioneer Natural Resources, expensive stock. Hess, Marathon, you notice a pattern here. Are these coming off of a bottom? Maybe like EOG, certainly the strongest of the bunch so far. Apache, I mean, these have been great companies. Over the last couple of years, they've been major leaders in expensive stocks, Apache being $130. Now it's down about $32 a share. Is this the end? And is oil going up and these stocks going to follow? Or are they just bouncing along the bottom? Right now, I'd say they're bouncing around the bottom. That doesn't mean that I haven't nibbled on a couple of these and taken some early positions, doing some bottom fishing. Hard for me to say one of these is the best. They're all sort of crappy. Speaking of bouncing along the bottom, I guess some of these stocks, if they don't go bankrupt, they'll turn out to be good buys. This is Freeport-McMoRan. Earnings per share disappearing. Revenue still pretty big. Those are billions, but much smaller than before. Another bouncing around the bottom with a big Kahuna. So Friday was a junk off the bottom rally. Problem is everything's sitting on the bottom. So pays a 3.6% dividend with the Kahuna. Do you buy this or buy a few thousand shares, $10,000 with? You'll get 2,500 shares and just forget about it. If they don't go bankrupt, you hope that someday they go back up to 40. Sometimes hope is a strategy, and that might not be a bad one. It's just not, it's not trading, it's hoping and praying. That's Freeport-McMoRan. Here's Alcoa. Southern Peru Copper, maybe a little bit better looking. Here's a story. Here's one that I did this with in 2009. It's a coal and ore stock. Doesn't really belong in this group, I think. This is Techminco. Here's my lottery ticket. 2008 and 9 in January, I'm sitting at a VectorVest meeting, and somebody says to me, you need to buy Techminco. Techminco at the time was trading in the $5 to $6 a week range. And I'm thinking, you must be crazy. The person brought it up to the VectorVest folks who said, no, ugly stock, horrible fundamentals, technical stink. I thought, what the hell, it's $4 stock, I'll buy a few thousand shares. Look what happened when the market started to recover. Traded up to 39, oh yeah, 42, 45, and eventually it rolled over. So these are lottery tickets. Imagine if you had 5,000 shares at $4 a share and it went up to $40 a share. That's not a bad return. So I have no problem with lottery tickets. Just remember what they are. They're lottery tickets. Most people buy the lottery ticket lose. 2% dividend, big move on Friday with the Kahuna. Everything is green. It's bottom fishing of the day. Biotech, beaten hard. Intercept is a potential takeout story. I haven't seen anything come across yet. I wonder, let's just look and see. This would be one that would make sense for Gilead. They already have a GI sales force, and there's a lot of talk about them buying these guys. They've got some FDA talk coming soon. Gilead's also raised $25 billion to buy somebody. Their market cap's $3 billion. For $5 billion, they've got another company. I don't know. I think they probably do get bought. It's just hard to buy this. Now let's talk about this stock. And this is what I want you to look at, this pattern. I've talked about this before. Sitting at Vector Vest meeting in 2014, they always do one the first weekend or around the first weekend of the year. And I go there to recruit people to come to my live meetings. Tell you the truth, it's not because I learn. And this stock just broke out. It went from about $50 up to $500 in 2 days. And I put something on the blog about be careful that this is a pattern that doesn't end well. And it got back down here to less than $100. Now it's moving up on speculation. Hard to play this in my mind. It's already had a big move. Do I think this thing gets bought out? Absolutely. I just don't know when. Gilead, perhaps its move up was in sympathy with Intercept, with people thinking they're going to buy it. Here's the problem with Gilead. Look at this earnings per share growth. Triple digits, 2 digits, negative digits. They've got to find some growth. Their hepatitis C franchise and HIV franchise are the best, but they get rewarded for growth, and they're not showing any growth. Celgene had some move last week, especially on Friday. Look at this big tail here, got up to the 17-day moving average. Everything's green. Mobo breakout from a squeeze. If you want to know what biotech does, this might be the one to watch. If this one moves up, maybe the rest of the group will turn around. IBB is the ETF that you might want to play here or follow. And you could see that IBB has dropped from a 200-day moving average of about 350 in half since September. Continuing down the top 10 groups, which is what I like to do, consumer finance. Another banking related. MasterCard, again, off the bottom. Pull back hard, had a Kahuna and a big move on Friday. Not a leader. Visa, Capital One, at least this one's been basing a little bit. Amex, junk off the bottom. And this is what comes to the top this week. So I think we have to be very careful. Semiconductor devices. Take a look at the first 3 or 4. And you're going to see the same thing. Stocks that have been in long-term downtrends that had a big move on Friday. This is Qualcomm. Here's Avgo, AVGO, or now called Broadcom, Cavium. Hard to say that these are stocks that are major growth stocks. Now, what's the problem with these stocks? The problem is this is $2 away from the 200-day moving average. They have a tendency to fail at this area. So is that enough move that I'm willing to take, that I'm good enough to capture that when I have a life? I don't think so. These are in downtrends until proven otherwise. This may be the bottom of all bottoms. I'm going to take some lottery tickets. I showed you one, which is a Techminco, maybe FCX. But again, it's a lottery ticket. This is an interesting lottery ticket. Not really a lottery ticket. Here's ExxonMobil. Despite all the energy, it's actually broken above the 200. So it's already gotten through resistance. Still may test, and I may want to watch it. Had a Mobo breakout. Everything turned green. Pays a 3.6% dividend. Look how volume has moved above its moving average, which is over here. This is relative strength versus the S&P. Big improvement. Here's a weekly chart. Is it done going down? Maybe. Exxon is one I'm playing, and it's buffeted by a big dividend, but I point out if it drops 10% this week because oil changes its mind, a 10% loss, my 3.6% dividend, takes a while to make up for that loss. Chevron, you think it's going out of business? I don't think so. Pays a 5% dividend, and here's Total. So I have a position in Exxon in case oil does bounce. Seems like a good place to be. Specialty Pharma. Go through a couple of these. These have been hammered. You see the bingos. That's a sign of being hammered. This is Shire who's buying Bixalta. Hard to say that this is a big change. A lot of overhead supply to get through. Valiant, the poster child of high-priced drugs, struggling to get above its 50-day moving average. It did have a Kahuna. Bixalta looks a lot better, trying to retake its moving averages. At least it's in an uptrend. It's too new to have a 200-day moving average. They're being acquired in the $40 to $42 a share range by Shire. They have earnings this week. So I'm looking at this and I'm saying to myself, what a bunch of junk. It's all junk off the bottom. Now, rallies have to start somewhere. And as I said, there's not a lot of things that have been leaders that are in good shape. So these are the things that led, at least from momentum, at the end of the week. A couple of other things. Airlines, I have a big position in Hawaiian, American, Kahuna on Friday. Like to see it get up here. High risk of failure on that point. Earnings per share growth has turned negative. JetBlue, again, lot of resistance to get through, but it's put in a bottom, had a couple of kahunas, good earnings per share growth. That might be one to play with. Southwest, despite blowout earnings, beating numbers, still in a deep downtrend. A lot of room to make up. Here's Hawaiian, one that I've been playing. And certainly I think still the leader in the group. No dividend, great earnings per share growth, broke above the 50. You might put a buy stop above that PSAR. It's getting to all-time highs. There are not many things in this marketplace. Before I say that, let me look. Yeah, there's not many things in this market that are getting close to all-time highs. So that tells you something about Hawaiian Air. And I don't usually go this far down, but I just saw a couple of groups that I like. And then footwear, take a look at the first 3 or 4. Big gap up by Columbia Sportswear right into resistance at the 200-day moving average. I would have to see what it did from this point because I think after a move like this, I think it comes back down unless we have a super strong market. Skechers, love this pattern. Sold off on earnings, has gone sideways now for several months. Had a big move up on Friday with a Kahuna, PSA reversal, mobile breakout from a squeeze, and all my technicals above are green. We'll come back to Skechers, hint, hint. Under Armour trying to make a move back up. So that's where the strength is. Very quickly, where is the weakness in this market? The market was so strong on Friday, there were no groups that had a force down for the last 2 days. If I look at a 5 days down, there's a lot, and that's because the market's been weak over a longer period of time. So what I'd like to show you is a couple of my favorite scans that I do to help me find the things that are moving and how I narrow this down. One of the great things about HGSI is much of the work is done for you. And so in HGSI, there are these things called smart groups. And one of my favorite groups are stocks that have a pullback to the 50-day moving average, and then they move up with a Kahuna. This scan is done automatically at night, and there's nothing I have to do. In fact, it's updated intraday as well. That's one of my favorites. If I hit the warehouse view, just take a look at a couple of these. Interesting. Consumer Staples ETF. Yeah, it looks kind of boring to me. A couple of these I know look good because I looked at these earlier. Insurance is supposed to be bad right now because interest rates are so low. It pays a 2.5% dividend yield. That might be why it's interesting. PRA, Pro Assurance Group, makes money but no growth in its earnings. Sort of not a belt hold because it didn't go here, but an island reversal, gap up here, right below the PSAR dot. Kahuna, everything is green. I like this a lot. In fact, if I get a take out of that PSAR dot, so I put a buy stop above this, I might play Pro Assurance Group. I didn't, yeah, that's not what I thought it was, my bad. Travelers, another insurance company, moving up off its 200-day moving average. Another play, Cabot. Now, why are all these look like they're sitting on their 50 and have a Kahuna? Because that was the scan that we look for. Another of my favorite scans is the squeezing with a potential PSAR reversal. And there's your Pro Assurance Group, made it in here as well. Ian and Ron have a number of their scans as well. And again, the point of this is to show you that the program automatically finds them. Now, as many of you know, I also use a lot of TradeStation, and what I do in TradeStation with scanning is I have a number of scans, some that I've interpreted from HGSI, some from George Lee, some from Alexander Elder, but this is my secret prize-winning formula. These are a number of scans that I look for specific John Person signals. And where I find many of my favorite stocks comes from this scan, which is looking for weekly high close dojis. So let's go back to my chart of the week, and then I'll finish by running through my buy list for the week. Chart of the week for this week is Skechers. I showed it to you before. I had a bongo weekly, but everything else was green up here. Mobile breakout from a squeeze. Broke above the 50. A number of pocket pivots in a Kahuna and OBV coming up off of its moving average. Within TradeStation with John signals, it had a high close doji with OBV heading up. And that little green there is a PPS. This is on the weekly. On the daily, high close doji on Thursday, PPS buy on Friday. Very strong volume. Down here, what does these dots tell me? It tells me it had a pocket pivot, a mobile breakout from a squeeze, the PSAR reversed on Thursday, and both Kahuna and force Kahuna through on Thursday and Friday. So, number of reasons why I'm buying it. Now, there's a couple things I don't like about this. One thing I don't like is it's moved a lot already, and therefore there's a lot of risk I'm taking. So my buy is at 30.50, which is above the close of the day and really above the last conditional change to the downside, which is a person indicator. My stop is $4.45 away, which is at 26.05, which is the red line. And my target, 1-to-1, is at 30.50. My trading plan is to buy it if the market is not trading off hard. I will have a buy stop sitting here if the market is up that I will get filled. I will hope to tag my target. At my target, I will raise my stop to break even and take half off. Although it looks like this is a long way to go on the daily chart, take a look at the weekly. It's not a big move at all. It's not even halfway up this long down bar that I'm trying to move against. Now, this is called Options Pro. I get this through VectorVest. It's also from Tom Joseph. Dynamic Trend, I think, or Dynamic Profile is the name of his company. Just look up Tom Joseph. He wrote Advanced Get as well. And this is a scanner that looks at the various spreads and trades that I can take on Skechers. Now, I like infinite profits, but I know that the bigger my profit opportunity is, probably the higher the risk or the less likely I'm going to get it. Think Powerball. I like to spend as little money as possible, so I like the fact that some of these trades actually pay me. And I need to manage my risk. Now, I'm managing my risk on this trade with a stop loss. So what might I do? Well, to me, I could buy the stock, and if I bought 100 shares at $30.38, I'm paying out of my pocket $3,038. I have an infinite profitability. I'm not getting paid anything for taking the trade, and my loss is the same $30.38 that I paid for the trade plus commissions. If I buy a call, I pay a premium. So the stock would have to move to 30.50 plus 74, 31.24 before I break even. Now I could control 100 shares, one calls 100 shares, for 100 times 74 cents. So it's going to cost me somewhere in the neighborhood of $70 to control 100 shares. And probably wouldn't be buying February 19th. I should have changed this date to March. but I'm just trying to work through some of the different ideas. If I buy a call, all I can lose is that $70 I paid, and I have infinite gain. So a lot of people like calls because they can control a lot of stock without having to pay a lot of money. The problem is it's got a time. It expires worthless if I have it moved above the strike price. So if the stock drops a point, it'll expire worthless. And it's got to move, in this case, about, we said to 30, 124, 90, about 3% to break even. How about if I can find a position that pays me money, has the exact same risk as buying the stock, but pays me money, I can control a lot more shares for the dollar, still have infinite risk, and since it's just like owning the stock, I can still have to worry about my stops because I could lose money. That's called a synthetic long. In fact, I would go long a call and short a put at the same strike price. Since the put is more expensive than the call, I'm going to have about 30 cents that's going to come to me for taking the trade. So unlike buying the call and having the stock go up 3% to break even, if the stock stays the same, since I got paid $30.20 to take, about $30 to take the trade, I got a credit of $30, even if it stays the same, I make money. If the stock goes up, I have an infinite opportunity, just like being long the stock. And if the stock goes down, I have a full position at risk, just like if I own the stock. In fact, what's the difference between buying the stock on the left and a synthetic long on the right? This is a P&L curve, and the difference is simple. If I buy the stock, okay, it's got to move a little bit to cover the cost of my trade, but beyond that, every time it goes up, I make money, and if it goes down, I lose money. If, on the other hand, I do a synthetic position, since I'm putting money in my pocket, and the stock actually has to drop some for me to break even, but just like owning the stock, I get the gains, I have the risk. The problem here is that some people forget to use stops on this position, but I kind of like being paid to take a stock rather than paying out of pocket. Some of the HGSI stuff and some of the John Person stuff and HGSI stuff I do together with a users group. You have to own John's stuff, which isn't cheap to participate. Almost everybody also uses HGSI. We share scans. We have frequent meetings, and John does teaching that's specific to our group. Any information about this, you need contact me at hgsidoc@gmail.com. So very quickly, let me go through a couple of my trades that I took this week or that I was interested in. So actually, let's just look at in here. Let's go. These were probably my finalists. So monthly, weekly, and daily. And let's take a look and see what we can find. AGRO. This is a Argentinian foods type stock. Sideways on the daily with a PPS buy signal. PPS buy on the weekly. Love the OBV leading price. Squeeze, mobile breakout, pocket pivot, and a forced Kahuna. PSAR switching on Friday. Lot to like on this stock. This is my buy list, AGRO. ATI, it's another one of those material stocks that have been hammered. I can make it look even worse. $120 stock, now down to $10. Falling knife on the monthly. On the weekly, look at the OBV leading price, PPS weekly buy. We haven't had a PPS weekly buy on this stock since July, and it moved up a little bit at that time. So that's interesting. OBV strong. Also a daily PPS buy, OBV strong here. Allegheny Technology. Now, just to look at an HGSI chart, to think I wanted this to be a short one tonight, I'll never learn. Long decline, Kahuna's mobile breakout, breaking above the 50. Even if it just runs up to the 200 and fails, that's almost a double from here. I like this one a lot. Keep in mind it doesn't make any money. It's in the iron and steel, and that's not been a great group. I'll skip this one because I don't know anything about it now. BEL, high close doji, PPS weekly buy, great OBV, PPS daily buy. BHP Billiton, another one of these beaten up miners. Why do these show up? Well, it's been destroyed. This OBV is interesting. Why is OBV moving up as the stock is moving down? Why is the person histogram getting less negative as the stock is moving down? That's a convergence, as John calls it, positive divergence, as some other people call it. High close doji on Friday. Again, lottery ticket, something to look at. CB, Chubb Group. This is another insurer. Weekly and daily high close doji and PPS buy signals. I don't love this one. It's kind of choppy. Volaris is a South American or Mexican airline. You can see it at a big run-up, pullback of late. Daily and weekly high close dojis, PPS weekly sell new, recent buy. I didn't like the OBV. It's coming out of a squeeze with a PSAR reversal and a mobile breakout. We already looked at ExxonMobil. I'll add to it the fact it's got PPS daily and weekly buys and super strong OBV. Flowserve has a chat problem. And the problem is it's got earnings this week, so I would be careful. But it does have PPS daily and weekly buys and huge OBV. Goodyear Tire, kind of a strange one, eh? Weekly and daily PPS buys, OBV is not great. Is coming out of a squeeze, and I think I liked it on the HGSI chart. So let's go back here and let's look at Goodyear Tire. I liked it because it had 3 Kahunas. Everything here is green, mobile breakout from a squeeze, and look at the earnings per share growth coming into this stock. Fundamentally strong, technical bouncing. NHTC, this is, I think, a generics company, sold off hard here. Pull back to support, weekly and daily buys, post earnings. Sally Holdings, this is one that's in a high type flag. Let's see if I can make it actually show up. Okay, I'm having an internet problem. Well, if I'm not going to get the internet to help me, I'll go back to HGSI. Sally pulled back hard, moved back up, failed the 200 here, then Bible gapped up here. Now it's in a flag. It's got earnings per share growth. I like buying flags when they break above, which it looks like it's doing. Skechers we looked at already. Smith & Wesson, I can't buy this because I have a hard time. I'm not a teetotaler that tells people what to do. I personally don't want to have a gun. That's only me. I respect anybody else's desire to have their own decision. Coming out of a mobile breakout and a squeeze, pull back here. If it looks like Hillary and the Democrats are going to win, then I expect gun sales to go through the roof. And if the Republicans win, gun sales will do well because the NRA will continue to do well. I think Smith & Wesson continues to go up. Here's Tech, my lottery ticket. I already showed it to you. Whoops. Time Warner. Telecommunication stocks have been strong. I'll show you the one that I bought last week in a second. Basing since August. Pocket pivots and Kahunas. Mobile breakout from a squeeze and all green came in Friday. Probably a low risk buy. Here's that airline from South America breaking above the 50 with a Kahuna. Whole food markets, whole paychecks has been in a downtrend. Again, just nibbling here. Earnings suck. A Kahuna pocket pivots and a move up. Its earnings came out, were actually better than expected. And then talk about good earnings. Win with a big move. It doesn't look like much there, but it was up 15% on Friday. When I see a 15% move on a stock like Win, I pay attention. Just to remind you, Steve used to have a whole lot more money. It was a $250 stock back in 2014. And on Friday, or on Thursday rather, you could have bought the stock for about $60 a share. So I went through a lot. I showed you some of the stocks that I'm looking at and how I think the market's going. The market certainly has, now it's working. The market certainly is oversold or was oversold. Some nice movements during on Friday. We'll see if they continue. Let's just take a look at the futures right now. The S&Ps are up 16 and a quarter, and we've got a new buy signal, and they went green. Again, it's 34 hours before you can trade them. NASDAQ, not a buy signal yet here. We'll see what happens later in the day. Russell, no, not a buy signal yet. And the Dow, a buy signal has popped in. So some strength overnight, but we got a long time before the market trades again. So on that note, just going to say goodbye and just go to the front page in case somebody wants to email me. Y'all have a great week. Good night, everybody.